This is the Euro or British pound daily time frame. Let's find out why price turned at the point marked by the red arrow. To understand this, we need to look to the left. From this view on the daily time frame, price action looks messy. There's no clear picture of what price was reacting to. That's fine. This often suggests we need to move to a higher time frame. Here's the weekly time frame. Still no clear picture. What about the monthly time frame? It's starting to become clearer. There are a few monthly fair value gaps to the left, but which one did price actually react to? The picture isn't quite there yet. Let's move to the 3-month time frame. Here, I would say the closest level is the fair value gap marked by the orange arrow. That's the potential target. But we don't stop there. Since price was consolidating for an extended period on the left, we need to continue moving to higher timeframes to look for stronger evidence. On this 6 months time frame, the previous fair value gap remains valid, and that makes this level even stronger. We absolutely need to pay attention to it. Beyond that fair value gap, I don't see anything else of interest. Finally, let's look at the yearly time frame. I don't see any significant levels here. Having reviewed all the higher timeframes, we can say with confidence that the 6-month or 3-month fair value gap is the true reason price turned at that point. Look at these two levels, they're only about 4 pips apart. It's hard not to believe that's exactly what caused the reaction. So what's the big deal? How does this actually help your trading? That's what I'll answer in the second part of this video, and if you've watched this far, you're about to learn the real gem. The significance of identifying the fair value gap is this: with that level of precision, we have strong confidence that price has reached its target. Once price reaches its target, it should move in the opposite direction, and it's unlikely to violate that level for a period of time, depending on the time frame you're trading. Since this is a 6-month time frame, our lower reference time frames would be the weekly or daily. Let's switch back to the weekly time frame. We can use the weekly candles to identify an order flow shift. The bullish candle marked by the red arrow is the key candle to watch for an order flow shift. As soon as that last bullish candle was violated by the bearish candle marked by the yellow arrow, that's when the sell signal was given. You might ask, could price hit the downside target marked in the shaded area, then reverse and break above the blue line? It's possible, but the probability is very low. We're trading off a 6-month fair value gap, which is our high timeframe upside target. We wouldn't expect price to hit a lower timeframe target to the downside and then turn around to violate a high timeframe target. In the same way, you wouldn't expect price to hit a 5-minute target and then reverse to violate a daily target from the opposite side. Once the last bullish candle was broken by the bearish candle, it became a bearish order block, and that candle is extremely important. Price may revisit it multiple times. Notice the green level, the open price of that last bullish candle. When price came back to reclaim it a second time, the precision is remarkable. And remember, the more precision price shows, the more confidence we have. ICT refers to this as a reclaimed order block. At this point, we can move the red arrow up to the new swing high. That becomes our new cap for higher prices. Look at the yellow line, another example of incredible precision at the weekly open price. This indicates a new cap has been established. We can now move the red arrow to the new swing high. Any short entries with a stop loss above that swing high are relatively safe. Finally, here's one more insight on the monthly time frame. Look at the red level, the bearish candle marked by the yellow arrow closed below the prior bullish candle. That's another confirmation that price wants to move lower. There is plenty of room for further downside in the days, weeks, and potentially months ahead. I hope you found this insightful.